Hello and welcome to the special edition of the Davos Diaries that I'm bringing you live from outside the Congress Center where the World Economic Forum event is going on in Davos. It's going to be an exciting couple of days ahead, and it's all because of US President Donald Trump. Even before his arrival here, the conversation between him and European leaders has gone to a higher decibel. It's all about threats of tariffs, counter tariffs and even higher tariffs. Through the course of the day and the last couple of days, really, we've been speaking to business leaders across the spectrum on how they think this geopolitical tension is going to impact the world order and the global economy. But first, listen in to what US President Donald Trump said when he said he will impose 200% tariffs on France.
Have you invited President Putin to be a member of the Board of Peace?
Yeah, he's been invited.
Do you have any response to President Macron saying he will not join the Board of Peace?
Oh, did he say that? Well, nobody wants him because he's going to be out of office very soon. So, that's all right. What I'll do is if they feel like Costo, I'll put a 200% tariff on his wines and champagnes, and he'll join. But he doesn't have to join. If he said that, you're probably giving it to me a little bit differently. But if he actually did say that, but as you know, he's going to be out of office in a few months.
What's going to be really interesting is that US President Trump and Macron both will be in this space tomorrow, sharing it with a whole host of other world leaders. There is going to be an address that US President Donald Trump will be doing. We'll be streaming that live. And then a meeting with business leaders. 164 CEOs is what we're hearing, out of which there are 7 Indian leaders that will also be there, from the likes of Salil Parekh, Sunil Bharti Mittal. You have, of course, N. Chandra. A whole host of business leaders will be meeting with US President Donald Trump as well. But we've had great conversations through the day where we have seen an immense representation of India at this world stage. Listen in to some of those conversations. You run a business which is in that sense Trump-proof. It's domestic-facing, financials, good set of numbers this quarter. Growth continues, but can the growth sustain as interest rate lowers, margins continue to be squeezed across the sector? What's the outlook there?
So, well, we're in a silent period, so I can't talk much about the future, but let me just say that we have declared our deposit and advances numbers, and what Axis needs to do on a more consistent basis is to deliver quarter on quarter and give no surprises. We've had our quarters of surprises. Last quarter we had some surprise around PSL. Now I've seen some banks being also asked to do something similar. Our name starts with A, so we tend to be higher up on the order in terms of RBI inspection, but that's the way it is. And obviously when I talk about consistency, it has to come in the form of growth. Both deposits and asset side has to come in the form of our credit costs, in terms of how we are expanding our various businesses. We've been working very hard to ensure that happens, but I think we have still got some distance to cover.
Deposit growth, you think will be it's a pain point last few quarters across the industry, and also part of it in a larger picture because people have more options on where to keep their money, etc. Do you see that continuing as a trend?
So, deposits going from retail investors or retail savings customers to wholesale because investing in the market all comes back in the system. So that is not leading to a slow deposit growth. It's just the form of deposit changes. I think what is leading to a lesser growth is obviously RBI had withdrawn liquidity. Now they talked about durable liquidity, but we have seen periods where RBI has intervened in the market, so that has sucked liquidity out of the system. Government has become very, very savvy with managing its money. Government is also sitting on large cash balances. So again, that sucks money out of the system. So in that sense, deposit growth has been a bit anemic. I think RBI is fully seized of the matter because at the end of the day, credit growth can't come without the deposits. And deposits also come because credit growth happens, right? So it's a bit of a vicious cycle. So in that sense, credit growth has started picking up. Good news. RBI has stated again that they will provide durable liquidity. Good news. I think government obviously will start spending. You've seen that in the last couple of quarters, government has been working very hard to get the reform program back on track. They did the GST, big change. They did the tax benefit, and they continue to talk about some of the reform process. They've set up empowered committees to look into it. So my view is that the GDP forecast for this year looks good. Next year, I think IMF has released the numbers, but my view is that it will be better than what IMF is forecasting. So generally good news around, and hopefully it will feed into the deposit side. But the progress is slow, and so let's see.
Any concerns around asset quality in any segments, or you think some of those things are in the past? We were seeing that with exporters because of the tariffs, SMEs, etc. Just a comment on that.
So on the exporters, yes, obviously some sectors of the economy which are very focused on US have partly got impacted, but I think they have found ways around it. They have found other markets, they have found other customers, they have found countries where maybe they can export to who could be re-exporting to US. So we have managed that tariff problem till now decently well. Retail credit costs did spike up over the last 8 or 10 quarters. That is definitely stabilizing and turning the corner. In many cases, if you look at the numbers, you'll see that the costs are actually has started, sharply going down. As far as the wholesale side is concerned, the credit costs remain benign. SME, people were worried too much of growth too quickly, and NBFCs are entering the space, but till now, at least the banking sector has not seen any real signs of a problem. We need to keep watching, but overall, I would say the credit costs are trending in the right direction.
The banking sector in the US is right now red hot. Everyone talks about just the AI trade, etc., but the kind of results that we've seen from the banking stack, what really is giving that boost of confidence, even in the middle of so much geopolitical turmoil?
So I think a couple of drivers. So if you look at, say, Citi's own performance, our M&A performance last year, we were up 85% in the last quarter. Overall banking is up 32% in terms of revenues. So it was Citi's best ever M&A year in its history. So a lot of drivers for that. And first of all, with current valuations, there's a lot of responsibility and expectation on companies, boards, management teams to show growth. So if that growth is not coming organically, then the tendency is to, okay, I'll go buy, I'll do something accretive, and I'll make acquisitions. So that's been a big theme, because if you don't show the growth, then investors vote with their feet. You get activists coming into your register, you have, share price being punished and the like. So that's been a big driver. The other kind of wild card has been a massive pool of liquidity, which the private equity guys, the financial sponsors are sitting on, close to $2.5 trillion of firepower. Remember, this is a community that is paid to invest. So they will deploy that capital. And what you've seen is they have, if you look at buyouts, were more than 50% of market activity last year from the sponsor community. So I think that is a big theme. So I would say, really, I think M&A has been the big driver. Abundant liquidity. There's a wall of money looking for investment. And all the capital formations are currently happening in the United States.
Exactly. Why is that wall of money not making its way to India? Or are you seeing some activity in the M&A space, the private space? What is the view there?
So you're seeing a lot of the larger Indian companies looking overseas. So Indian corporates are ambitious. They are looking at assets, both in Europe and in the US. So the ambitions of corporate India is absolutely intact. It is. I wouldn't say it's rampant, but it is definitely there. What India clearly, you saw at the beginning, there was a lot of hope and expectation that supply chain rejigs would result in India being a net beneficiary. So this is, basically China plus meant, Vietnam, Cambodia, Thailand, India were massive beneficiaries of this. The whole Make in India theme was very dominant. And I think what is causing an element of hiatus are twofold. One, a concern that valuations at some point got carried away. So in other words, I want to be long India, I want to invest in India, but do I need a right entry point? So do I time it and wait for an opportune moment? I think the second is really the tariff and the lack of a trade agreement, which is kind of still embryonic. There are signs that something is coming and then nothing seems to come. So I think, that will provide more clarity and also greater impetus to the Make in India and the supply chain kind of, manufacturing kind of engine story.
And the rupee, you would say number 3, the depreciating rupee and how it's...
I think there is more dollar strength. And when you look at kind of, despite the macro and the geopolitics, the dollar, the dollar has been very strong. That's also driven by all the inward investment you have seen. The one point also around India is the demographic lends itself, you cannot ignore India. When you have, 1.4 billion people, whatever you can produce, you can consume. It's a captive consumption economy. It's a growth economy. It's a young, vibrant economy. It's an emerging, the middle class is getting more consumption power.
I think the bigger risk is perhaps what US President Donald Trump is going to say and do at tomorrow's session. Do you think that that's the dominating theme this year?
Of course. I mean, you can see everybody's got a cloud over their heads. Nobody knows what every morning brings. And, I think we're just going to have to deal with things one day at a time and then look at them as an aggregate and figure out how countries collaborating together are going to overcome these challenges. It's not going to be each country to themselves.
You think so?
It has to be. I mean, if you look at, we had a delegation from the German Chancellor last week. I was in that delegation. Apparently, the President of the UAE made a 3-hour visit to India yesterday or day before. And it's clear that we have a European parliamentary delegation which is visiting us in India at the end of the month. It's clear that they need large trading partners and large countries with large populations and large growth opportunities to work with.
Is that something that you at a company level are trying to do? Because US tariffs and what's happening in the US economy has had some impact for you as well.
Look, the US is undoubtedly the largest market in the world. It's the largest consumer of pretty much anything and everything. Yes, so it obviously is one of the most important markets for us. But I think in terms of absolute growth, the Indian market is going to be the biggest market. And that's the market that we are focusing on. Across sectors, including a lot of new ones that we will get into, new sectors that have opened up, and just the building of Bharat and India. This whole infrastructure-led boom, which will lead to manufacturing and lead to many other factors, many other opportunities, are probably the largest and most exciting period of India's history, and something that we look to take advantage of.
What are some of these sectors that you said you want to foray into in the Indian context?
The whole industrial sector. So across every facet of industry, India's energy requirements are going to go up. Roads, rail, ports, marine, construction and mining equipment, all kinds of stuff is going to go up, and that's a huge opportunity.
And what is the kind of capex that you're slotting for this, say, in calendar year 26 or FY27?
So we have an ongoing capex of the last 2 years, which is almost complete. But I think going forward, we will plan new locations in new states to set up these facilities, because a lot of the growth is going to come disproportionately from the eastern and northern part of India. Because the southern and western part of India are far more developed than the central and the eastern and northern part of India. So that's what I think we would look at doing.
2025 was also, I think, in a sense, a watershed year for the world to discover the promise of Made in India defense. That has been the case for you as well. Can you elaborate on that?
Yeah, I think Made in India defense is a strategy that we've been working on for the last 15 plus years. Our products are made in India, designed in India, designed IP owned in India, and they are for the world. So we've been exporting our products, and we will continue to do so. And we're also developing a lot of new products that hopefully will add to our product portfolio.
You're now going to have one more, not food tech, but quick commerce player that's going to get listed. Recently, JioMart claimed it was the second largest e-commerce player. Just on the competitive landscape, do you see this as becoming tougher and tougher?
Look, I think fortunately, we were always born in competition, right? If you look at our origin as a company in food delivery, we were what? I think there were 8-10 players in the market, and that was not too long about 10 years back. If you even look at 5-6 years back, there were three credible players in the market. So competition is something which is there. Any sector which is this attractive and this large, competition is bound to come in. The good news is, if you look at the quick commerce as a category, the total addressable market is so huge that it is not our worry or focus. The focus squarely always remains on what are we able to do for the customer in terms of convenience, what product lines we can add. Just look at where our product line has gone from about, say, 6,000-8,000 SKUs barely 18 months to 24 months back to almost touching 50,000 plus now, right? So the sector is transforming at such a pace that competition will come in. So it is not like it suddenly happened. It was happening for a period of time. I think we are fully prepared for it.
Big talking point around your space has been gig workers, 10-minute deliveries. I think you have also changed the rules for Bolt, or the timings for Bolt, have you, as a result of this whole 10-minute directive which came from the Labour Ministry?
There's no directive, first of all, right? I think if you look at, I think overall, if you look at the sector, right, this has truly emerged at, I'll say, the third pillar of livelihoods in India. Like if you look at the formal employment sector where people go to work for a year, lifetime, whatever, that is well understood. Then there's self-employment, which is a lot of people, and I'm not talking about large businesses or startups. I'm talking about the day-to-day millions of businesses which people start in the country, right? I think this truly has emerged as a third pillar, which is flexible employment, and it's a very important pillar because in our country we need all avenues of livelihood to fire, whether it is this, whether it's jobs in the manufacturing sector. I think more power to everyone, honestly. Having said that, I think the premise of quick commerce is always based on two principles. Three, actually. One is store density. So where do you live?
I live in Mumbai.
Mumbai. Chances are wherever you live, one of the quick commerce companies will have a store within half a kilometer where you live. Fair, right? Second is technology. If you ever go inside a pod, right, you may wonder when you order 10, 12 items, how can it happen that it gets packed in 10, 12 minutes? 2 minutes or 2.5 minutes or 3 minutes, right? There's extensive deployment of technology in which I can say from a global standpoint, India is a leading quick commerce sector globally. I think that's something that all our citizens enjoy as a service, which is available in very few countries.
There was a recent study, I believe, that you guys published, which talks about 93% of the workforce being affected by AI. It's kind of fascinating how the conversation in AI grows from leaps and bounds, because at the end of the day, we were talking about displacement. 2 years ago, we were talking about how AI might take away jobs. But now the prediction is 93%, Ravi. Is that a realistic possibility?
So Ayush, when we did this study in 2023, that is the first version, we did say that 90% of the jobs are going to get impacted. We bumped that number up because we did a revision of that particular study, and right now it kind of looks like 93%, so pretty much in the ballpark range. The difference between 23 and 26 is that 93% actually can be done today. We were predicting that 90% of the jobs are going to be impacted by 2030, and here we are in 2026. That's already 93%. We also reflected on what's the value of labor just in the United States, which is going to be exposed to AI, and that's roughly to the tune of $4.5 trillion. The total labor in the U.S. is around $15 trillion, and $4.5 trillion is almost, I would say 30% of that value is exposed. We also kind of double-clicked on a whole bunch of things. We took 18,000 tasks, we took 1,000 occupations, and we kind of looked at job families and where the impact is high. The jobs which have an existential crisis, which is primarily jobs which have a 50% exposure, we call something called the exposure score, where you look at what's the exposure to AI, and there are 5 levels in which we look at it. And anything which has more than 50% exposure is a job which is going to disappear. We looked at jobs which are having 25% exposure, and these are jobs which will get significantly impacted. And we believe almost 30% of the jobs will be existentially, they will disappear. Yeah. And 70% of the jobs are going to get impacted, which is around 25% of exposure. So the exposure is high. The velocity has been very high. That's another metric which we have been measuring. At an average, 7% is the annual bump on exposure because of the advances of technology. So whatever we thought we did in 2023, if you just add 7% every year, that's around 25%. So the exposure of every job has gone up by almost 30%. So it's a thing now, happening now. The velocity is very different. I call it, there is a differential in velocity. Infrastructure and innovation is happening at a very high velocity. That drift of value will happen to the jobs. There is going to be a differential between the velocity, but it's actually falling in place in terms of enterprises seeing that productivity today.
We're getting you all the top corporate voices right here at Davos. K. Kritivasan, TCS, is with us now. Hi, Kriti. Great to have you here and speak with you.
Thank you. Same here.
Okay. AI is a big theme, though we're talking about spirit of dialogue this year as the theme, but AI, of course, dominates everything. TCS has stated its goal to be the largest AI services company in the world. What are the interesting conversations you're having here?
See, this time, the most important topic our customers want to know is how are they going to make AI real for them, and how do they going to scale with AI? Like, see, till last year, the discussion is around, is it real? Is it going to deliver business benefit? Now, most of our customers are going beyond that. The question is, how do they scale? Productionize, how do they scale? And what are how do they adapt it internally very quickly, accelerate the adoption of AI? So these are the conversations that we are having this year.
How many of these pilot projects, because you've quantified the AI revenue, how many of these pilot projects you see converting over time?
I don't want to put a number, but it's much more than what it was before. And people have moved beyond pilots. People are looking at where is the immediate ROI, where is the shortest payback period, and where they can get the business benefit. So there's a very interesting and good movement beyond pilot. And more and more projects are becoming productionized now.
You know, India is being called the anti-AI trade. Is it people like you who are going to prove that perception wrong?
Who said India is not anti-AI trade? India is actually...
No, anti-AI trade as a trade, because there's not enough AI happening in India versus the rest of the world.
No, I think we at TCS, this is in the forefront. Yeah, like you said, we have declared our aspiration to be the world's largest AI-led services company. We are helping all our customers adapt and accelerate AI. So we definitely want to prove that wrong.
What do you think is going to be the impact on jobs because of what we're seeing?
There will not be any impact on jobs. Like every technology that comes in, people have to adapt to it. And like every other technology cycle in the past, it will create more jobs, not less jobs. But probably the kind of jobs it will create will be new. There will be some movement from the existing jobs to new jobs, but overall there will be more opportunities for people.
Last question, expectations from budget this time.
See, our expectations, how do you make more startups flourish? How do you make it ease of business, increase ease of business? But otherwise, technology, government has been super supportive for technology companies. We are very happy with the way things are.
Thank you for your time, Kriti. I know you have to run. Thank you.
Thank you.
If you have an opportunity to say one thing to President Trump, what would that be?
I would urge him to try and find an understanding with Europe about Greenland.
Mr. President, a lot of what you're doing actually is helping the US economy. You have an opportunity to make that net wider.
But actually, India loves the US.
A lot of the countries around the world look up to US. I think a bit of a stability and...
Take a break.
I think there's just too many changes happening too quickly, sometimes randomly, which is, I think, creating a bit of a chaos.
India and the US are really completely aligned with each other and need to work together.
That will be a golden opportunity for him, and I'm sure he would then deserve the Nobel Peace Prize.